Now the topic before us is identifying the culprits in balance of payments. Before we proceed further, we must understand the meaning of balance of payments. Every country is exporting certain goods and services to the rest of the world. In the same way, we are receiving certain goods and services. That is, we are importing certain goods and services from the rest of the world. On the humanitarian ground, our country also sends donations to the rest of the world, and at times our country also receives humanitarian aid. We may also receive gifts and donations from the rest of the world, and our country may also send donations, gifts to the rest of the world. That is, there may be unilateral transfers, one sided transfers, which are sent from our country to the rest of the world or which are received from the rest of the world. We sometimes we give loan to the rest of the world, and sometimes we receive loans from the rest of the world. Some of the residents of the country make investments abroad, and some foreign investors also make investments in our country. So, balance of payment is a record which makes balance of payment is a record which makes record of all these economic transactions which take place between the residents of the country and the rest of the country during a specified period. As already discussed, that balance of payments is follows the principle of double entry bookkeeping, where every transaction is recorded as a debit as well as credit entry. BOP record looks just like this. On one side, there are debit entries, and on the other side, there are credit entries. On the debit side, these are recorded as negative, and credit side is recorded as positive. On the debit side, we take all those economic transactions which result into outflow of foreign exchange. And on the other hand, on the credit side, we take into account all those economic transactions which result into inflow of forex. Forex means foreign exchange. Such as, if we export goods and services, these result into inflow of foreign exchange. So these are recorded on the credit side. If we import goods and services, we have to pay foreign exchange. So these are recorded on debit side. If we receive unilateral transfers from abroad, that is, we are receiving foreign exchange, these are recorded on credit side. If we are giving unilateral transfers, or that is sending aid or donations or gifts to other countries, then there is outflow of foreign exchange. If we are receiving loan, then it is inflow. If we are giving loans, lending, then it is recorded on the debit side. If the investments are coming into our country, these are recorded on the credit side. If investments are being made by the residents of the country to the rest of the world, these are recorded on the debit side, as there is outflow of foreign exchange. So in this way, the balance of payment looks like. There are many more entries there in the balance of payment statement, balance of payment record. So what is the meaning of disequilibrium? First, we should understand, before we go into the details of causes of disequilibrium in balance of payments, we must understand what is the meaning of disequilibrium in balance of payments. Disequilibrium in balance of payments means that there is that the total receipts or total inflow of foreign exchange is not equal to outflow of foreign exchange. That is, the total receipts of money which is coming into our country is not equal to the total outflow which is going outside. Total receipts not equal to total payments. That is, debit and credit side are not equal. Either credit side is more than debit or credit side is less than debit. So these are the two situations of disequilibrium in balance of payments. When credit is either less or credit is either more than debit entries. That is, the total payments do not match the total receipts of foreign exchange. So what are the possible reasons for the causes of disequilibrium in balance of payments? First is unfavorable balance of trade. When the imports of the country are more than exports, it means that if we say we are importing goods or services worth 1,500 crores, and on the other hand exports are only to the tune of 1,000 crore, then it is quite evident that here imports are more than exports. When imports are more than exports, it means that in this example, it means that we are receiving only 1,000 crores of foreign exchange, whereas we will have to make the payment of 1,500 crores. That is, imports are 500 crores more as compared to exports. So there is disequilibrium of balance of payments. We will have to make the payment to the rest of the world. Next point is fluctuation in commodity prices. There are certain countries which make export of one particular item, say oil. If a country is very rich in oil, it exports oil to the rest of the world. Suppose at present the rate of oil is say $90 per barrel. Suppose its rate comes down to say $80 per barrel. We are not taking into account the exact market price. We are only assuming. So what will happen? The export value of the oil will reduce. So it will naturally affect the balance of payments position. When the exports value of the exports will reduce and import will remain constant, so it may result into disequilibrium in the balance of payments. That is, inflow of foreign exchange may be less as compared to outflow of foreign exchange. Next point is natural factors. Sometimes droughts may hit a country. That is, there may be shortage of rains in any country during any season. It may result into no production of crop at all or less production. In the same way, if there are floods in the country and the country is producing, say, rice, it exports rice to the rest of the world. And if there are floods, no doubt, when rice is produced, enough water is required for rice, growing rice. But excess of everything is bad. If the water remains stagnant or the floods are there in the fields, the yield of the crop reduces, or whole of the crop of rice may destroy. So due to these natural factors, natural disasters such as drought or floods, exports of the country may be severely affected. When the exports are severely affected, the country may or may not be able to export anything to the rest of the world during that particular year. So it may result into disequilibrium in balance of payments. That is, the in that case it may be possible that exports may reduce to minimum, and whereas imports will remain on the stable side, or imports may increase because the country which was sending rice or exporting rice may have to import rice in addition to the other imports. So there may be disequilibrium in balance of payments, that is, the imports may increase export. Then other point is net outflow of unilateral transfers. We have already discussed that unilateral transfers are one-sided transfers. One-sided transfers means for which we do not get anything in return. At times we send aid or donations to the rest of the world on humanitarian ground, such as we may supply them food or medicines on humanitarian grounds. We may add that when we are sending supply free of cost to the rest of the world in the form of, say, medicines or food, then an estimation of the amount of that goods or services is made which is being provided to the rest of the world free of cost on humanitarian grounds, and an approximation or estimation of the same is taken into account in the balance of payments. So this is the way in which way we take into account the free goods and services to be taken to on record in balance of payments. So when we so in this way sometimes we also receive aid, grants or donations from the rest of the world. So when unilateral transfers received are not equal to unilateral transfers sent abroad, it results into disequilibrium. That is, we may receive either more transfers, that is the foreign aid, or we net result may result into disequilibrium. For example, suppose we may receive, say, 1000 crore received in foreign aid from the rest of the world, whereas we send, say, 1020 120 crore rupees have been sent abroad as unilateral transfers. So what is the net? That is, we have there is net outflow of 20 crore rupees abroad. So when there is net outflow of unilateral transfers is more, that is, debit side is more as compared to the credit side, that is, we are receiving less payment in the form of unilateral transfers as compared to the unilateral transfers sent abroad, it results into disequilibrium in balance of payments. Then it may be also possible that investors of our own country or the foreign investors do not believe in the political and economic stability of our country. It may happen at times. So when the investors do not believe, or there is economic instability or political instability in any country, then the investors of the country or the investors from abroad withdraw their investment from that country, or the investors of that country also make investments abroad so that they may get best returns. Sometimes if higher interest rates are there in the rest of the world in comparison to the domestic country, then investors of our country may also send their money abroad. So the capital flight is also a reason for disequilibrium in balance of payments, as foreign exchange will go out of our country. Sometimes government policies also result into disequilibrium in balance of payments. For example, there may be some trade barriers imposed by the government. If the government reduces import duties, what will happen? If the government reduces import duties, it means that more things will be imported. And when more things will be imported, it will lead to when more things will be imported, we will have to make more payments abroad. That is, there will be more outflow of foreign exchange. If the government of the country puts restrictions on imports, what will happen? If the country puts restrictions on imports, then the imports of the country will reduce. That is, the outflow of foreign exchange will reduce. So in this way, there may be there is difference in the balance of payments. Next point is burden of payment of foreign debt. It is quite possible that any country has taken a loan from the rest of the world or the other countries, and it may have to make large payment of debt at any particular point in a year. So it may also result into disequilibrium in balance of payments, as foreign exchange which the country is receiving by way of exports, imports, or unilateral transfer or some other means, it may be less, whereas the country may have to make a very big payment of foreign debt, which results into disequilibrium in balance of payments. Next point is demonstration effect. In this digital world, we are connected to the rest of the world. Except one or two countries in the world, all over the world, we are connected with the rest of the world by way of internet. We are connected with the rest of the world socially, economically. We are having personal relations with them. When an when the residents of the underdeveloped country see on social media platforms or by way of personal relations, they see that what are the clothings or what are the foods which they consume, what is their lifestyle. The people of the underdeveloped or developing countries try to imitate those people of the developed countries. So the residents, or if the residents of a developed or underdeveloped or developing country imitate the developed countries, so it may result into import of certain goods and services from the rest of the world. So when the imports goods will or services will increase, it will naturally result into outflow of foreign exchange, at it will ultimately result into disequilibrium in balance of payments. Next point is speedy economic development. If a country is taking steps that there is economic development in the country, there is investment environment is proper in a particular country, and the government is taking proper physical and monetary policy steps are also okay, there is political stability, and there is ease of doing business in a particular country, then all these steps taken by the government of the country result into speedy economic development. When there is speedy economic development in a particular country, it results into the increase in the income of the residents of the country. When the income of the people rises, what happens? They try or to purchase not only the domestic goods which are available, but also try to purchase the imported goods. Because income level has increased, they will not only purchase the goods which are available domestically, but will also purchase those goods which are not produced locally but produced abroad and have been imported. When they will import, they will have the demand, goods will be purchased from abroad, there will be import will increase, and when the import will increase, foreign exchange outflow will be more, and it will result into disequilibrium in balance of payments. Next point is population growth. As shown in this figure, population is very less, it is slowly and slowly increasing. And what happens when the population of the country increases slowly, we will understand how it affects balance of payments. Suppose the population of the country is only 1000 and the country is exporting goods worth rupees $1000 to the rest of the world. We are only assuming number of population people or number of people. What is the population? It is only 1000, and we are exporting, and that country is exporting $1000 worth goods and services to the rest of the world. Suppose the population of the country increases. When the population of the country increases, suppose it is exporting, say, rice to the rest of the world. When the population has increased, it may be quite possible that it is only in a position to export rice worth rupees $700. So export has decreased. On the other hand, when the population has increased, it is also quite possible that more goods will be imported. So exports reduce, imports more. So there it will ultimately have disequilibrium in balance of payments. That is, the outflow of foreign exchange will be more because exports are reducing and we are importing more as compared to previous years. So all we have discussed all the points which may result into disequilibrium in balance of payments. A small and temporary disequilibrium is not necessarily a cause of concern. There may not be any problem if such type of disequilibrium, that is the flow foreign exchange is more in a particular year. It may not be a cause of concern. But if the outflow of foreign exchange continuously remains to be more as compared to the inflow of foreign exchange for many years in a row, it is surely a cause of concern for the government of the country, and the government of the country must take steps to see that outflow of foreign exchange is reduced and steps are taken that to ensure that inflow of foreign exchange is more. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.